You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310 and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Okay.
Are you ready, Steve?
I'm here. I can do my recap. I just didn't hear anything else.
Bert?
I didn't know.
Well, all right, fellas. Let's go!
Okay.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Yeah, good afternoon. Welcome back. Today is Monday, 10th day of August, 2020. Thanks so much for tuning in. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, point any internet-connected browser to youtube.com/ or make that CFRN.net/live. You can do the other one too. There you'll find a live real-time simulcast of the show as it unfolds. The only difference is with the YouTube version or the live version on the CFRN website, you don't have the chat box. I monitor the chat box in the GoToWebinar app. We're streaming in so many different places during the show: Facebook, YouTube, Twitter. I can't chase and track and answer all those chat boxes. So if you want to participate in the discussion, if you have questions, then join using that link on the homepage of CFRN.net. That will give you the chat box every single time. Okay? All right. Let's open with a word of prayer. Heavenly Father, we the people in the land of the free and the home of the brave desperately need you more than we ever have before. We pray that you would help us to leave our ways of seeking just to be blessed and instead start seeking to be a blessing to others. We beg for your guidance and your wisdom for our leaders. They need it, as do we. We ask you to protect our land, our homes, our businesses from enemies, both foreign and domestic. And we praise you, God, for the freedom we have through the blood of your Son. May your plan be our plan. May your plan be the desire of our nation. Help us to become one people under God, the living God. In Jesus' name we pray. Amen. Okay, all right. Happy Monday. If there is such a thing, this would be it. Okay, markets have been active this morning. Now, let's do this. I'm going to give you the cash markets. These are the indices from around the world. Start here in the U.S., where the Dow is up 266 points. Now, here's the biggest curveball the market has probably thrown you in some time. While the Dow is up 266 points, the NASDAQ is down 71. S&P 500 up just 2.5. Russell 2000 up 23. Now the mover and shaker there is the Russell. That's a gain of 1.5%. The Dow is up almost 1%. The NASDAQ, on the other hand, down almost 0.75%. In the commodity basket, crude oil up 87 cents, trading 42.09 last. That's a gain of a little over 2%. Gold up $15.90, trading 20.4390 last. That's a gain of about 0.75%. And then there was silver. Silver up $1.53. Now, a reminder, a $1 move in the price of silver if you're trading the futures contract, that's a profit or loss of $5,000. A $1 move in silver. Silver today again up $1.53, trading 29.07 last. That's a gain of almost 6%. We've been talking a lot here these last few weeks about the potential for silver to outpace gold as the metals rally across the board. In the Asian markets at the close, Nikkei down 88 points, Shanghai up 25, Hang Seng down 154. No movers, no shakers. In the European markets at the close, FTSE up 18, the DAX up 12, the CAC up 19. Again, quiet trade, no movers, no shakers. For the Asian markets, we've got a mixed day, or had a mixed day. In the European markets, it was a green day. And here in the U.S., thanks to the NASDAQ, we've got a mixed day going on. Again, the Dow positive 257 points, almost 1%. S&P 500 kind of at the flat line, up 1.5. Russell 2000 up 1.5%. The NASDAQ definitely bringing up the rear, down 73 points. So we'll go to Michael. We'll get a recap of what happened this morning in the live training room. When he's done, I'll be back. We'll take a look at the Concierge Trade Alerts from last night. We'll take a look at the Logic 247 alerts. All that and answers to your questions. Just put them in the chat box, and one of us will be happy to answer them for you. Michael, take it away.
Okay, I got it. Here we go.
Alrighty.
Good afternoon, everyone. Today is Monday, the 10th day of August, 2020. If you have not taken a free trial with us, go to the homepage at CFRN.net. Right down here, it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page, EminiTrainingschool.com. Now, on this page, you can go directly to this page, EminiTrainingschool.com. You don't have to go to the home page. But anyway, however you get here, all that we ask for in here is your name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you, and hit the send button. Once you hit that send button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that confirmation, we don't know that you took the free trial. Now, hang on, let me slide this over here. For some reason, I think I might, you know what? I'm just gonna open it up. Here we are. The spreadsheet. We'll go to the spreadsheet. Everybody wants results. But you can hear me now, Joan, right? And you could hear Dwayne just a few minutes ago. We didn't get the intro. We couldn't hear that. But it was playing on YouTube. Okay. So, as I said, today is the 10th day of August, 2020. We made 5 ticks in the euro, 22 ticks in gold, and 4 ticks on the ES. Put us at plus 301 and a quarter on the morning session. Today it took 11 minutes and 1 trade to get to the goal for the day. At that point, we were up $100 a contract, and we took a total of 12 trades. So on the month now, we're up $1,995. That's over 6 trading days, averaging $332 per contract per trading day. We have gone 122 consecutive days of getting our goal. Knocking on wood. Right now, on the year, we're at $55,306. That's 1 contract, 2 hours per day. And that's over 146 days, averaging $378 per contract per day. Thank you, Mr. Trump. And COVID. All right, so now let's jump into what we actually did do and didn't do. And you can see right here during the break, there was awesome movement here on gold. There was a short there, and there. But let's get into what happened during the training session this morning. Okay, and once again, gold was a big winner for us. And I missed some awesome trades. All right, we'll get right down to the beginning. Here we go, 9:30. So we didn't have anything going on right through here, but right here was the first opportunity on gold to capture that big leg up. Now, I ended up not getting that, but then the cycle was resetting and whipping around. So over the next 10 or 15 minutes, there wasn't a lot of opportunity. If you're doing the YBR trades, let's see, during the YBR trades, there was a short right here, right on the YBR, down close, bearish separation. Blue on the YBR, up close, bullish separation. Nothing in there. Now this was a regular trend line trade, or no, it was actually a BBC trade, and we ended up with a break even on that. Over here is where we picked up our goal for the day. We grabbed 10 ticks right here and got our goal for the day. And we really didn't, I mean, we had red on the YBR, bearish separation. So you could have had a downward movement right there. Could have taken advantage of that. But we didn't have a regular trade set up there. Now we had a bounce off the BBC right here. That would have been good. That I missed. We had a couple of short trades right here that I missed. We grabbed nothing right there. Break even there, break even there. 7 ticks there, I think. No, I'm missing a trade. Somewhere in here there was a trade where we picked up 7 ticks. That last one was 5 ticks. Oh, here it is. We picked up 7 ticks here. And the last one was 5 ticks, but we had a couple of break-even trades in between. Then during the break, as I pointed out just a minute ago, there was a lot of opportunities trying to break. Right here on the long side, there on the long side, here on the short side, here on the short side, here, for shorts. So there was a lot of opportunity in gold during the break. And, gold's just been crazy lately. So, I'm not complaining. I like it. We've been making more money in gold than anything else lately. But it is what it is. On the euro today, we picked up 5 ticks on this first trade, and then we had a break even on the second trade. Now, doing the YBR trades, there was a break even one there. And then you get into the break. And there was nothing there. Okay, in crude oil. Yeah, see, we had red on the YBR with bearish separation, but the cycle's going up so steep, I would have hesitated on this one. And that was pre-market, but that's right when crude opened up. There was a long trade right here and another long trade right here. And I don't know why I don't have any of that written down. There was a long trade right there that we took some profit on. But I don't have any of it written down. So I have to go and look at my crude oil. Hang on. Let's see. Yeah, we got 10 ticks on that one. See, 10 ticks. Okay, so I got to update the spreadsheet. So we picked up 10 ticks there. I missed this trade right here. There was a YBR trade right here Then we get into the break, and it was just a long trade right here. And that was it on the crude. Now, I do have to update my spreadsheet. On the ES, we had just a few trades. We had one here early on, another one there early on that I missed. Then finally I got into one, and I got a break even. This was a YBR and a bounce off the BBC. That worked out well, but I didn't get filled. There was a follow-up right there, and another one right there. Then it changed directions, flipped the YBR over, and right in here we had a break-even trade. Here we had, well, we didn't get filled. Then we picked up 4 ticks on this trade right here. Okay, we had a break-even trade here, and there was a long trade off the BBC right here. I'm just looking at the YBR trades as well as all the other ones. Well, then we get into the break, and during the break there was a YBR short right here that was also a bounce off the BBC. That would have worked out. And here's another YBR short that is still working out as we speak. Okay. And that was the morning session. So let me go back here. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Hello, Stephen. Today is the 10th day of August 2020. Today we picked up 5 ticks in the euro, 22 ticks in gold, and 4 ticks on the ES. Actually, and I now have to enter in 10 ticks there. And I have to update my trade count on the day. 13 trades today. Okay. So again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we're up $401.25 in total. We had 5 ticks in the euro, 10 ticks in crude, 22 ticks in gold, and 4 ticks on the ES. Today I took 11 minutes in 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 13 trades. So on the month now, we're at $2,095. That's over 6 trading days, averaging $349 per contract per day. And we are now at 122 consecutive days of getting the goal for the day. On the year, we're at 55,406. That's over 146 trading days, averaging $379 per contract per trading day. If you have not taken the free trial with us and you want to, go to the home page at CFRN.net. Right here it says free 5-day trial. Just click on that. It's mentioned a bunch of places on the home page. And it's going to bring you to this page, EminiTrainingschool.com. Here all we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you will be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click that link, we don't know that you took the free trial. So you got to click that link. Okay. And with that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready.
Okay.
Alrighty. Recap of the recap.
Today it was 11 minutes and 1 trade to get to $100 per contract. 11 minutes and 1 trade.
Good job.
Thank you.
Good job. Okay, guys, let's now take a look at the Concierge Trade Alerts and the Logic 247 alerts. Let me get Telegram open. I closed it. There we go. It's rare. Okay, Stephen, did you already answer Stephen's question? I have not seen the link to view
I did not.
via YouTube in a few days. Sometimes it's always at the same place, Stephen. Just go to youtube.com/CFRN. There you'll find a archive of every daily show going back many years. In fact, you can always watch the most recent show, but if you're new to CFRN, a good idea is to scroll back a week, scroll back a month, scroll back a year, and check out the daily show. And you don't have to watch the entire 2-hour show, but you can fast forward up to the point where Michael does the recap of the live training room, and then right behind that, I do a recap of the alerts as I'm about to do right now. This gives you a real good idea of what everything's about, how they all go hand in hand. What you learn in the live training room on the range chart, that applies to every market, every time frame. So the education that you get in the room each day for 2 hours, that is the foundation. That's the principle upon which everything operates, no matter what time frame we go to, no matter what market we're trading. Now there's 2 types of alerts. There's the Logic 247 alerts, which are based on current price action. Those are delivered 24/7 via the private Telegram channel. The channel opens for business Sunday night at 6 p.m. Eastern and remains open around the clock, just like the futures markets, until Friday afternoon at 5 p.m. Eastern. The Concierge Trade Alerts are based on historic price action. Those come to you via Telegram as well, but those are based on historic price action, and it's a static report which comes to you shortly after the Globex Open. So you've got 2 different type of alerts, one based on current price action, one based on historic price action. Individually, those are great opportunities to get your points for the day. When you find both Logic and Concierge pointing their finger at the same important price, important area, that's where you'll find your highest probability and lowest risk trade opportunities. Last week was week number 105 for Logic 247. It's 105 weeks. Last week we issued a total of 89 alerts. Now, because we stayed trapped in that range for days on end, we had a large number that never triggered, 23. That left us with 66 actionable alerts. 12 of those were stopped out based on not risking more than $300 per contract per trade. So that represents 18% of actionable alerts being stopped out. Now, what we've averaged over the last 105 weeks is 20%. So just a little better than average. Channel opened last night, 6 p.m. Eastern, as it does every Sunday night. Since then, we've issued a total of 23 alerts. Still waiting on the results of 4. 3 never triggered. That gave us 16 actionable alerts as of 11:30 a.m. Eastern. One of those has stopped out. So early in the week, we're looking at 6% of actionable alerts stopped out. Again, that's based on not risking more than $300 per contract per trade, less when possible. Okay. Now, I'm going to drag the Concierge Trade Alerts up to the big screen, and you can grab a screenshot if you'd like to. Okay, they got out last night at 6:15 p.m. Eastern. Now, the rest of the world's waiting on Monday morning to roll around 9:30 Eastern for Wall Street to open, but we find plenty to keep us busy on a Sunday night. S&P, Dow, Russell, Crude, NQ, 10-year notes, gold, Canadian dollar, euro, British pound, and silver. Okay, and silver has been something to behold here these last few weeks. So let's go to a daily chart of the S&P. That window of opportunity that we've been tracking for a few weeks, we finally made it to the top. And we exceeded it by 2 ticks so far. Top of the channel was 33, or top of the window was 33.55. Swing high on today's session was 33.55.50. And again, a daily doji. Now, most of these candles were dojis at some part during the day, some part during the session, and that's all part of this bigger picture dynamic known as the all-time historic high. The closer we get to that all-time historic high, the oddlier, I'll make up a word there, the oddlier the market will behave. Now, we know that this gap from February got filled last week, finally. But I noticed last night, and somehow I'd overlooked this prior, on February the 20th, we closed the session at 33.71 and a quarter. On February 21st, we opened at 33.65. So there's about a 6-point gap there. Okay, again, this high is 33.65 and a quarter. It opened at 33.65, okay, and then dropped like a rock. So if we come back over here, 33.65, let's put a little marker there, so we'll know when we get there. 33, because 33.65 has the potential to be good resistance, and also 33.71. So that's about 33.65. And let's put the price there so we'll remember what that is. Okay. All right. Now let me zoom out so that everybody can get a look at the big picture so that you understand how all this comes together. Now, we trade intraday, we trade on smaller time frames, we train in the morning in the live training room on the range chart. And the reason we use such a fast chart in the morning is because we want to have as many opportunities as possible to show you the strategy, the methodology, the entry, the setup, everything. If we used a larger time frame, say a 30-minute in the live training room, well, you might see 1 or 2 triggers a day as opposed to the multiple triggers that you see on that range chart, because it is a bit faster. Important to remember that everything you see on the range chart, everything that we do, everything that we teach, everything that we trade is fluid across all markets and all time frames. So when we put in the all-time historic high back in February, we got below the BBC. Now that's the green line here. It stands for bull bear cross. Well, price is above it on every time frame. We're bullish. We anticipate higher prices. Once price is below it, we're bearish. We anticipate lower prices. So this was the pandemic crash. Here's the bottom, which came in on March 23rd. We rallied up to the BBC. When we approached from below, we expected good resistance. It was. So there's the retracement. We made another run at it. On this retracement, we ran into blue and climbing. Technical term, CFMA1. I refer to it as red and falling, blue and climbing. When price, just as the BBC is resistance when approached from below, blue and climbing is support when approached from above. So we rode the back blue and climbing up to the BBC, and just as this was a big day for the short side, this was the beginning of all of this right here in this candle. This candle, even though it's red and has a somewhat bearish connotation, it's the first candle that opened and closed above the BBC, and then we put in a nice leg, a retracement. Price always reverts to the mean. In our case, the mean just happens to be green. So we had a leg and a retracement, a leg and a retracement, leg and a retracement, and then on this leg we took out these swing highs. Okay, now coming back down, that will become potentially good support. Just as this bearish cross on the way back up, we waited on that for months, and it was the good resistance that we anticipated. This area above here, the all-time high, that's going to be a very difficult area to get through, at least the first couple of attempts. Now, when price ran into resistance, which was created by this support, this resistance, again, we waited, for a couple months on that. When it got there and it couldn't get through it, resistance always sends price looking for support, which it found at the BBC. We bounced into red and falling, and as I said, that's good resistance. So it took us a number of sessions to get through there. 1, 2, 3, 4, 5, 6, 7, 8, 9. It's about the 11th or 12th session, in a couple weeks, we finally got back on the other side. After we dipped below the BBC, we got back on the other side, which took us up to the next area, or took us back to the same area, which sent us back to the BBC, which sent us back to resistance. And then we finally got through that resistance on July 20th, and that took us up to the next area of resistance, which was created by the bearish cross. Okay, now this is a very important dynamic of the strategy. You'll see it on the daily chart, the 30-minute chart, the 5-minute chart, all markets, all time frames. Okay, so it took us 1, 2, 3 sessions to get through there. We completed this window of opportunity, where you got 2 ticks above the window of opportunity today. Now this next area of resistance, potential resistance, 33.65, based off of right here. That is the opening high of that candle. And that little gap right there, once that gap is filled, then based on a daily chart, we have nothing between us and the all-time historic high at 33.96 and a half. Okay. All right, so that's where we stand on the daily chart. Let's go to the 30-minute chart. Now, all of the alerts are based off of a 30-minute chart. That's my go-to chart. In the discussion group, and it's very important that you follow along in the discussion group in Telegram, because that's where we discuss the moves, that's where I post charts, it's where other people post charts, that's where you have a chance to ask questions and get answers live in real time. We do provide unlimited one-on-one mentoring. However, there are some guidelines. We provide 2 hours every morning from 9:30 a.m. to 11:30 a.m. for you to ask questions. It's 2 hours, and when you ask in the group environment, everyone benefits. You get what you need, but everybody else gets to hear the question and the answer. Okay? Now, we also have a workshop on Thursday nights, 2 hours, sometimes less, sometimes a little more, however long it takes to deal with whatever questions there are. That's another opportunity to ask questions in a live environment. Michael does a workshop on Tuesday afternoon, and again, he and I are available for one-on-one mentoring sessions. You can contact him to book with him. You can book with me right on the website. or you can talk to Valerie. You can call her anytime at this number right here, 949-42-EMINI, or send an email to support@cfrn.net. Last night's Globex Open, right here. Here's Friday's close. And on the Globex Open, where did we go? Right down to the BBC, where we found good support. Okay. Now, the Concierge Trade Alert last night for the S&P was 33.51, which is right here. Weekly zone 33.53. The swing high was 33.55.5. So there was your points for the day, up to the zone and to the swing high from 51 to 55.5. So it's a 4.5 point move. Price then got back below the trigger, bounced off the BBC, put in a new swing high, got back below the trigger. These triggers here you want to stay away from because you're fighting red and falling. That's resistance. Here we punch through again, get back below the trigger, and one more time. So we had 1, 2, 3, 4 valid triggers to trade 33.51 up to the zone at 53. At the short side for the S&P last night was 33.35. $33.35, and the zone below is 33.31/32. So that's a 3-point move, $50 a point, $150 per contract traded. On this trigger that we have going off right here, we're still fighting red and falling, whereas here we had blue. Anytime you have a long alert, be very cautious. And just because it's an alert doesn't mean you should trade it. An alert means you should go and look at your chart and make sure that when it triggers, that the indicators line up properly for either a long or a short trade. Okay? So, during this 30 minutes, we covered 2 weekly trading zones. Now, the weekly trading zones are published every Monday morning for our members at 6:15 a.m. Eastern. We've published the zones since December 14th, 2009. So, over a decade, coming into, I guess, our 11th year. The zones create a framework. It gives all of our traders a good idea where the market is going to find resistance and support throughout the week. The BBC, blue and climbing, red and falling, those are areas of dynamic support and resistance, which obviously changes with the flow of the market. The zones, you should look at those as fixed support and resistance because they don't change. Once we publish them on Monday morning, they're carved in stone for the entire week. We don't massage them, we don't manipulate them, we don't mess with them. They stand as they are. Now this yellow line, that is a zone from last week. It was the next to the highest weekly zone last week. Only 3 things happen when price hits a weekly trading zone. The most likely thing is consolidation. Okay. The second most likely is rejection And that's when, as the candle closes, all that's left touching the zone, here's an example here. See how price hit this area and then was rejected? All that's left is just wick touching the zone. Okay. Now, the third and least likely thing is the slice, and that's when price just slices through a zone like it's not even there. So we slice through this zone. Now, typical behavior is when a slice runs out of steam, loses its momentum, it will return to the zone it sliced through. Typically what happens on a down move, as we retrace to the zone we sliced through, that typically will become good resistance, and then we continue in the direction of the slice. This one did not do the next high probability thing. Now, there's a difference between knowing the future and knowing what the next high probability move is. Lots of websites out there that promise you they know the future. They've cracked the code. They can read tomorrow's newspaper today. How's that working? When God created Adam, back in Genesis, if you've ever read the book, I'm sure you have, God chose to give Adam all sorts of abilities. But there's a couple things he chose to leave out. He did not give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. Not man, not machine, not algorithm, not nothing, not no way, not no how can predict the future with 100% accuracy. What you can do, and what our strategy and methodology will help you do, is to always know what the next high probability move is in any market, in any time frame. Number one, price is always trying to get to a weekly zone. It's either trying to get to the zone above or the zone below. How do you know? Well, if price is above the BBC, we're looking for higher prices. The trade to target is the zone overhead. Okay. Once price gets below the BBC, now price is trying to get to the zone below, and in this instance we ripped right through the zone like it wasn't even there. That's the least likely thing to happen. You won't see it a lot, but it does happen. And where did the market find support? Right at the zone. Okay? So we dropped from 53 to 31, basically 20 points in 30 minutes. And we've almost recovered. We're sitting right at that 33.51 trigger. That was both a concierge trigger and the logic trigger. Actually, I think the logic trigger was 33.50. Here, let's take a quick peek. Now, you already saw the concierge alerts. That's the static report that comes out at the beginning of each session. These are the ones that are delivered live in real time as opportunity presents itself. So this week, week 106, we started out last night, the first alert in the channel, 13 minutes after the open. This is Pacific time. That's my time zone. The alert was to be long 33.50, initial target 52, next target 54, next target 60, all-time historic high 33.96, and then there's a weekly trading zone up above, and this was from last week because this early on a Sunday night I haven't yet calculated the new weekly trading zones. Okay, so on Sunday nights early on we're still working off of the previous week's zones, and those previous week zones do hold sway over the market up until Tuesday, Wednesday, and then sometimes you'll see instances like this 33.24 where it can hold for a week, sometimes even 2 weeks. So from I said when both of the alert services point at the same important price, important area, that's where you'll find your truly high probability, low risk trade opportunities. Okay? All right. So, while I'm there, might as well go ahead and scroll through here. We won't have to do it later. There we go. So the first alert was for the S&P, and then the Dow, and then the Russell. Okay? Thumbs up. Probably don't have to explain that. When you see the Z's, that means it never triggered. Here's crude. Here's gold. Here's another. So we're still waiting on results. On this one, no trigger. This is the British pound, the euro. No trigger on the Canadian dollar. There's another S&P. Again, that's the second. This would be the third alert from this same basic area, 5051. And then we hedged the ES this morning in the pre-market strategy session. I opened the room most days, not every day, but most days, about 30 minutes prior to the Wall Street open. And we go through each one of the markets, we take a look at the daily chart, and then we go to the smaller time frames, and we put together alerts that we anticipate triggering during the Wall Street session. So this morning, both of these were done during the pre-market strategy session. So if you aren't attending that, if your schedule permits, it's a good place to come hang out and ask any questions you have. That's another opportunity to ask questions in a group environment where everybody benefits from the question and the answer. Here's the Dow. Now this one was to be long 27,485. And when Valerie did the recap on this, we had ran up to 583. Okay. Now that's 100 points at $5 a point. That's $500 per contract traded. This one was to be short 42, down to 40, the weekly zone. But this thing just kept moving. And so the longer you're with us, you'll learn about the exit signal. You'll learn how to stay with the trade until the chart actually tells you it's time to get out. And as we come across some exit signals on here today, I'll show them to you. This was a hedge on the Dow, but it never sold off like the S&P did. And we had a long on the Russell. Still waiting on this one. Hedge on the NQ. Crude oil stopped out. When you see a red X, that means it got stopped out. Gold. Now, this was to be long gold at 2051. We ran up to 2060, almost 2061. So that's a $900 per contract trade. Silver to be long 29.18. And we ran up 7 cents to 29.25. A $1 move in the price of silver is worth $5,000 per contract traded. Now that could be a $5,000 profit, or it can be a $5,000 deficit at expense. Okay. Now there's no reason to let a trade go against you, $1 in silver. So we are very risk averse. We use aggressive risk management. In the live training room, we only risk 8 ticks on any one trade. With the alerts, both Logic and Concierge, we don't like to risk more than $300 per contract per trade, less when possible, and that's based on market structure. It's a 3-step methodology that I teach all of our members. In fact, when you become a member, that's one of the first one-on-one mentoring sessions that we'll have, where I teach you how to read the chart and how to let the chart tell you where you should put your stop loss. We don't use any kind of a formula. We don't use a percentage of the ATR. We simply ask the chart, where do I put my stop? And using the three-step methodology, the chart will tell you. So that was gold, that was silver, it's the Russell, it's the NQ. Still waiting, still waiting, still waiting. Okay? So, again, the criteria for an alert to be placed in this channel is simply whenever opportunity presents itself. Last week, as I've already told you, there was a total of 89 alerts, 66 actionable, 12 were stopped out. So it was just shy of the 20% average, 18% stopped out. Okay, so we'll go back to the Concierge Alerts. And we'll go to, so we've covered the S&P. Let's go to the Dow. The alert last night on the Dow was to be long 27,390. And again, important prices, important areas are almost always tested, and let me show you exactly what that means. So 27,390. The initial trade to target, or the trade to target right overhead, is the weekly zone. That is this week zone, 27,440. So from 390 to 440, that's a 50-point move at $5 a point. It's $250 per contract traded the first time. Then we dipped back below the trigger and did it a second time. Then we dipped back below the trigger and did it a third time. Now on this one, you do have red and falling overhead, but your trade to target is before you hit red and falling. And as you can see, just like I showed you on that daily chart, remember I said everything is fluid across all markets, all time frames. When price ran into red and falling on the 30-minute, just like you saw on the daily, resistance, 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 and it finally got resolved right here. Price got above this zone at 440 and traded up 90 points to the next zone overhead. That zone to zone move is worth $450 per contract traded. And now we've traded up to 27,640. So if we take 640 and we subtract 390, that's a total of 250 points traveled. At $5 a point, that's $1,250 per contract traded. Now, we don't have an exit signal here when we re-triggered here, okay, and we ran into this target. The move that you should be looking at would be this move, which we had a logic alert on. Now, this logic alert took us up to the zone overhead. We got a steep pullback, but we still don't have an exit signal. An exit signal, I'll show you an example over here. Okay. So last week we had a long here at 27,130. So when we triggered here, we hit the trade to target, but you'll notice the step line, it steps over and it steps up, and it steps over and then it steps up. But right here it stepped over, stepped over. The exit signal is when the step line crosses over, price starts to walk sideways, step line crosses over, the first red candle that closes below the step line after it crosses over. So here you were just in the process of crossing over. You were also at the trade to target. So even if you hung out to take your exit here, That would have been a move from 27,130. Closing price 27,257. So on a long, it's the first red candle that closes below the step line after it crosses over. And so far, the market has made $1,250 per contract available. That's per contract. Now, when you start out with us, we have what's called the 2420 blueprint. That's designed to take you from 1 to 20 contracts over a period of 24 months. The initial goal, as you're learning the methodology and learning the strategy, is to put together 10 consecutive days in a row in the simulator, in the demo account, 10 consecutive days where you reach your goal in 10 trades or less. Once you complete that, the blueprint will give you the green light to go live. Putting together those 10 consecutive days in a row is a sign that you've got a pretty good handle on the methodology and the strategy. So the green light is to go live, but just with one contract. Now the goal, now that you're trading live with one contract, is to increase your account balance by $2,000. The difference between the first contract and the second contract is huge. Once you increase your account balance by $2,000, the blueprint will give you the green light to add a second contract, but this time you're adding it with profit you earned in the market. It's the first sign you have that you are actually building this time you're actually building a profitable trading business because you're able to add your second contract with profit you earned in the market. Now the blueprint will also tell you when it's time to add number 3 and number 4, and number 5. If at any time the blueprint says it's time to add the next contract, if you don't have profit available in your account to underwrite or pay for adding that additional contract, then you should not add. Okay? You should book a mentoring session so that we can go through your trades with you and try to help you figure out why it is you don't have the profit available in your account to add the next contract. Also, once you go live, any time that you have 2 consecutive days in a row that you don't reach your goal in 10 trades or less, you should come out of live, back to sim. That's not a walk of shame. It's a smart business decision. Because if things are not going well, then we need to figure out why before it gets out of hand and you end up blowing up yet another account. The whole purpose of the blueprint is to help you not blow up another account. Now, I'm not going to tell you that you can't blow up an account, but if you do, it'll be because you did not follow the steps as outlined in the blueprint. Because again, when you have 2 back-to-back days where you don't reach your goal in 10 trades or less, come out of live, back to sim. Michael and I will meet with you. We'll go through your trades with you. We'll help you figure out why. What happened? Was it you? Was it just the market conditions? If you struggled this past week, the week just behind us, we were trapped in a range for a good part of the week. And when the market becomes range bound, it can be some of the most difficult trading that you'll find. Okay? So, this move here as an example, from 390 up to the target at 440, 50-point trade. Okay? At $5 a point, that's $250 per contract traded. But if you follow the blueprint, when you have earned the right to trade 10 contracts, that's increasing one at a time, as the blueprint tells you, always adding the next contract with profit you earned in the market. That $250 move suddenly becomes a $2,500 $1,200 move. This $1,200 move becomes a $12,000 move. So it's always very tempting for someone who has the money to figure out that, yeah, you know, I'm a pretty clever guy. I'm sure most people need to go through that, you know, one step at a time stuff, but I'm gonna jump to the head of the line. You know, I'm not gonna worry with trading, you know, 1 and then 2 and then 3. I'm just gonna trade 10. All I can do is ask you to please not do that, because if you do, you'll just blow up another account like 9 out of 10 traders do. And that is the sad statistic. 9 out of 10 traders do fail. The reason they fail is because they have no one to teach them how to trade. You can buy books, you can buy videos, you can sit in chat rooms, you can listen to grumpy gurus. That's not the same as having someone who is dedicated to teaching you how to trade. It's just a world of difference. Now, if 9 out of 10 fail, then I guess simple math says 1 out of 10 succeeds. Okay. You track down that 1 out of 10 and ask them if they had a teacher. 9 times out of 10, the answer will be, of course. How else would I learn? There's 2 types of personalities that are drawn to the markets. Now, 9 out of 10 drawn to the markets look at it and go, whoa, this is crazy, I'm going to kill it, and end up getting killed. 1 out of 10 looks at the markets for the first time, sees all the opportunity, and says, you know what, this is an incredible opportunity. I better hurry up and find somebody to teach me how to do this. Now, ask yourself, when you first laid eyes on the market, what was your initial gut reaction? This is simple, I'm going to kill it. Or, this looks like a great opportunity, I better find someone who can teach me how to do it. Now, chances are you were the 9 out of 10. Well, there's a 90% chance of that, I suppose. But now that the scales have fallen from your eyes, now that you've gotten beat up a little bit, battered and bruised, now you recognize that you probably do need somebody to actually teach you. Now, there's a lot of very complicated solutions for trading the markets out there. Complicated, convoluted, expensive. You're never really quite sure if you learned it or not, because there's just so many moving parts. You got to check the MACD, and then the stochastics, and then the advanced decline line, then the trend, then the tricks. We just don't use any of that stuff. You see, most of these solutions that people try to sell you, they're solutions to solve problems that really don't even exist. When you learn to look at the market almost naked, and that's what our charts are compared to the charts that you'll see a lot of people use, we don't have much on there. We don't need much on there. With the S&P, with that trade last night, with the 1, 2, 3, 4, however many trades there were. Okay, this last one just did it again. So what was it? 1, 2, stay away. 3, 4, 5. So 1 alert, 5 triggers, 5 opportunities to get your goal for the day. Without a stochastic, without a MACD, without a trend, without a tricks, no Keltner bands, no channels. This is trading reduced to the simplest common denominator. For some people, honestly, it's too simple. Come on now. I've been at this 10 years. I've spent 20, 30, 100 grand on education and seminars and indicators and oscillators. Don't try to tell me it's that simple. Well, I won't try to convince you, but I will tell you, Trading's not easy, but if you get rid of all that stuff, it can be simple. It really can. Question is can you allow it to be that simple? Because once you understand the methodology and the strategy and how to read the indicators and how to use the alerts, basically your job now is to show up, to be present, and then to exercise self-discipline, self-control, patience. And that's where a lot of traders struggle. Okay? So S&P, the Dow, let's go to the Russell. The Russell took off like a rocket this morning. Okay, last night's alert for the Russell. Long 1571. Every one of our partners, every member, had an opportunity to be long the Russell at 1571. Now there was also an alert in the Concierge Alerts. This is the one. This is the Concierge. There was also one in the Logic Alerts. So we had a trigger. We got back below the trigger and triggered again. Now this first run up took us to 1576, so that's 5 points at $50 a point, $250 per contract traded. You get back below the trigger, you get a chance to do it all over again. You get back below the trigger. This time it's a different scenario. Here you've got blue and climbing. Over here you got red and falling, which, remember, that represents potential resistance. Okay? So the market struggled and struggled and struggled and struggled, and it finally pulled back to the BBC and it pulled back to the trigger. But on this trigger, you still got red and falling overhead. So what you have to do is you have to let price get above red and falling before you can consider going long. Now, once you take out that swing high, the distance to these swing highs is not that great. Okay? Any one of these areas could be potential resistance. So the golden opportunity is up here at 15. Let's see, that zone is 1579/80. 1579. There we go. Okay. So 1, 2. Gotta be very careful here. And then this move, which I think we put out as an alert this morning, 1577 to the zone at 79. There's your 2 points for the day again. $100 per contract traded. Whatever market you're trading, whether it's gold or crude, those are 10 ticks. That's $100. S&P 2 points is $100. The Dow 20 points is $100. Those same 2 points or 10 ticks become double, triple, quadruple as you increase the number of contracts. But it's only going to happen if you can exercise the self-discipline and self-control to not jump to the head of the line, but to just at each level acclimate yourself. When you make that move to 2 contracts, the blueprint's going to hold you there for a minute. Okay? When you're acclimated, it's going to tell you, all right, add number 3. But you only add with profit you earn in the market. So what's price doing now? It's run into resistance up at 1595. Weekly trading zones are an area. Okay. So we got to 1594.1. Price is now attempting a pullback to the BBC. Hopefully we will get that pullback, and that will give us a long opportunity back up to the zone overhead. So from 1571.76, that's 5 points, then another 5 points, and then on this trigger here, again, you wouldn't trigger in here. You got to take out these swing highs. So that puts you in here. This candle could be an exit signal. Okay. See how the step line, it starts out on the left side of blue and climbing, steps up and over, up and over, up and over, and then it steps over. So this red candle, if it closes below the step line, that's the chart telling you that this move has probably run out of steam and you should consider taking an exit. Okay, so that's the Russell. Let's go to the NQ. All right, last night's alert for the NQ, to be short 11,067. $11,067. Okay. Now from 67, 37 is the zone below, so that's a 30-point move. At $20 a point, that's $600 per contract traded. We traded through the zone at 11,037. The next zone below is 109.16. 109.16. Okay, we came within just a few points there, a few ticks of hitting the zone, which we expect to be good support. This pullback we expect to be good resistance. We may even spike up, touch the zone, but as long as resistance holds here, then we'll have another short opportunity to the downside. Okay, John just showed up, so I'm going to open up his mic. After we talk to John, we'll still recap gold, crude, and silver. We haven't got to those yet. If you have any questions, put them in the chat box. So John, I'm going to open up your mic right now. John says you're muted on your end. You need to unmute your mic.
How's that?
Yep, now I got you. Loud and clear.
Okie doke. Thanks for coming on. Thanks for letting me come on. You know, we had a bit of a furious flurry there in the palladium this morning. I mean, this palladium being gotten up to 2,800 or so before the crash and got to about 2,400 on the rebound is really acting pretty strongly, considering everything.
Here's palladium on a daily chart.
Yeah, I mean that. You know, what I'm a little bit concerned about now is having gotten up there, and we are potentially maybe heading for a pullback in this palladium, which might drag the metals down. The silver is actually stronger than gold, relatively speaking, today.
It really is, and I've been saying for weeks that the potential for silver to outperform gold is it's huge. It's astronomical.
Well, actually, if I could make a few comments on it, you know, I think it's listening to you and me long enough. we've been forecasting this for some time. You know, we had 30. Remember, we had the high 27s, the high 20s, and the 35 to 36 sort of as targets for the silver. But I went back. I might be able to email you this chart because it's quite intuitive. You know, it's not that easy to get a good chart going back to the 70s of gold and silver and what happened. But I, you know, to be fair, you know, I'm on the record on this show on numerous occasions earlier on this year saying that, you know, before this explosive up move, that 2020 could be like 1979. And, the strangest thing that I guess nobody in the world is expecting right now, but it certainly could happen, and maybe by design, is interest rates are basically negative to all intents and purposes, and 13 trillion around the world or so, and may go negative in the U.S. still. But
they said they won't do that, but you think they may find themselves forced to?
No, I don't actually. I'm about to say the opposite. Remember when we had? Remember last year? It was actually about this time.
It's like a reverse split. It's the death knell. I mean, no negative interest rates, please.
Right. Remember last year I made the comment when this was kind of the beginning of the rage. I think we were up to about 18 trillion in deposits. And I said, if we start to see the interest rates rise, by the world. I basically said by the world. And that was sort of September, October, before the big rally into the end of the year. And so we had a kind of a firming up, and obviously the repos and the things that the Fed were doing helped as well to get us to the February 2020 top. Now, look, when you put 1.7 trillion or 2 trillion, 3 trillion into the markets, I mean, very few people. I made a big song and dance about this greatest day in history in terms of a Fed action, unprecedented. Nobody really saw what the implications were, but we certainly set about trying to give our point of view that it was going to, not only make new all-time highs in the market, which has happened sooner than anybody expected, including ourselves, but we called Amazon to new all-time highs pretty much before anybody else to lead the way. And but we did say that the gold and silver will be the ultimate beneficiaries of this in a way that could be hard to fathom. So what I'm getting at is this, and it's, could we go to 5,000 this year? Could we go to 3,000, 2,700? I think 2,700 is a pretty good bet. Will we go cataclysmically higher, did in 1979, 80? Let me just sort of tell you where we are on the timeline. Remember, just for the benefit of those who may not know, we bottomed in 1976 at 104.6, $104.60. And a fellow called Peter Steidelmeier, who's quite famous for inventing the market profile, basically bought a couple of hundred contracts of gold basically that day and held them all the way to 875. Made a couple of $100 million. And for a guy who started with $35 in his pocket, had the port of trade, that was a pretty cool accomplishment. Mm-hmm. Now, here's the thing. I think just about everybody on the planet has been blown away by the force of this up move in silver, which in spite of you and me, laying out the upside, which we said would go up in dollars into the 20s, if you remember, ahead of time, kind of took us by surprise because we've actually gone up almost $2 on a couple of occasions, and we're up $1.6 today. So, we are in a pretty furious advance in this silver, and this is
silver outpacing gold right here.
Well, look, that's if you remember, we called it about 135, Dwayne, when I said that very day, I think we just broke the parabola. When you go parabolic and you invert, you kind of elicit an opposite response.
Put this on a daily chart. Hang on. There we go. Now it looks right. I knew something didn't look right.
So here's going back to the 1970s. So we 104.6. And by late 1978, we had doubled to about 200. Okay, And by about this time of 1979, the middle of the year, we were at about 250. Okay, and believe it or not, we didn't really, the afterburners didn't kick in, if you like, until the fall. Sometime it was September, October, November. The gold actually went from 250 to 875 in about 4 months, into January 20th. So what caused that to happen? Well, believe it or not, at the beginning of 1979, interest rates were about 1%. By the end of the year, they were 21%. And that's what nobody sees coming right now. And let me paint an idea, this is breaking news coming from yours truly, because we've kind of alluded to this before, but it's starting to look pretty good in terms of what may happen in the next few weeks and months if what I'm about to suggest is actually going to happen, which is that the coronavirus is exhausting itself and is actually, if you go and look at all the countries around the world, there's a few of them that are still kind of peaking, mainly India, couple of others. Colombia's in a bit of a bad way, Ecuador, a few other South American countries, Brazil. But what is rather interesting is that in the last week or so, there have been some pretty drastic declines in the daily cases. I mean, really drastic. Just considerable declines in the daily cases. And the U.S. actually looks like it might have peaked, in spite of the number of 5 million. It might be peaking. And so the key thing is, this is actually kind of a critical week. Because if we sort of continue down lower, it really is going to be starting to look a bit like Europe a few months ago when it was peaking and going down. And I think the sense that this thing actually is kind of exhausting itself could bring us back to normality sooner than you think.
Well, I mean, take a look at this, John. I mean, this is just real simple math. World population is 7.8 billion, right? And there have been 732,284 very tragic deaths. Any life lost is tragic. But when you compare 732,000 to 7.7 billion.
Interesting. Yeah.
I mean, we're talking less than 1%.
Yeah, more people died per day in the U.S. average in 2017 than is dying this year. Can you believe that?
Yes, I can. And but everyone I try to even have the discussion with, they seem to get angry. And they shove a mask in my face. I mean, I wear the mask anyway just because it's just like when you go to the store, you wear pants because that's what society says. You should wear pants when you go to the store. So I wear pants. I wear a mask because that's the societal norm now, is to go out and about, whether it's to protect yourself or to protect others or just to appease the powers that be. You do it. But the hysteria that's been created around this math, 7.8 billion people, 732,000 tragic deaths. That doesn't that math doesn't heal a broken heart because you lost a loved one to this very deadly virus, but it also puts the deadly virus in perspective. It's not like it's overrunning the earth. I mean, we lost between 50 and 100 million people to the Spanish flu, and we had a population nowhere near 7.8 billion back in those days. So, anyway. I just wish people could get out of the grips of the media that is trying to sensationalize this and make it something that it's not. Is it bad? Yes. Should we take it seriously? Yes. Should we become hysterical over it? Should we close our businesses? Should we change our way of life in America or anywhere in the world? No, 1,000 times no. The math, the statistics don't bear out the garbage that the media is trying to shove down our throats purely based on a political agenda. And that's what it is. You know, they've weaponized and politicized a virus, period. And I think it was a pandemic. That's my thoughts, and I'm not going to change my opinion until somebody gives me evidence to show me otherwise. Go ahead.
Well, that's the point. And, you know, here's the thing, you know, there is an upside surprise, and this thing gets, you know, starts petering out. It's actually going to spur the economy more than people think. And we've, you know, there's been, look, the market has been insanely bullish. And, you know, generally speaking, the market never lies. And most 9 times out of 10, it predicts the future. So there's a really, really good chance of an extremely hot economy, either going into the end of the year or into 2021 in a way that'd be hard to fathom, frankly. You know, this 10% growth, maybe more, is a real possibility. And I can tell you, if the Fed gets a chance to raise rates, they're probably going to take it. And that actually could be very bullish for gold and silver in the same way that it happened in 1979-80. So what I want to try and say today is, do not rule out the possibility of multi-$1,000 upside for gold, even this year, and potentially higher interest rates. You know, my personal feeling at the moment, just being, you know, like conservative, is that 2,700 looks like an achievable objective for gold, and silver 35, potentially up to 55 or 60 maybe. However, it just could all happen this year. I mean, it would be a bit crazy if it did, but you can't rule it out. I think more likely is we have an upside, then we have a kind of a pullback maybe in 21 as the economy gets stronger, and then maybe 22, 23, 24, we go all the way to much higher numbers. So because, you know, there is a pretty good chance we're going to have another hit of some sort in 2023, 24. It is, you know, it's just the way the world works. Now, obviously, if there's an upset in the election, that would drastically increase the possibility of gold going to much higher levels.
Which way would you consider an upset at this point?
Well, I mean, if the Democrats win, you know, don't forget you got the House and the Senate and things that could really disrupt the future.
I'm just curious, based on the polls right now, is Biden winning an upset, or is Trump winning an upset at this point? I mean, I know we always expect the incumbent to retain the office. It happens most of the time. But the biggest risk is the cheating or stealing the election. Oh yeah. I couldn't believe when they announced that within days of saying we're going to do the mail-in ballot thing, all of a sudden there's big changes in the head honchos over at the U.S. Postal Service, and they come out and officially, I guess it's the union for the postal workers, comes out in support of Biden.
Yeah.
Well, now that sounds a little like collusion. I hate to even use that word, but something smells rotten.
Yeah. As far as the market is concerned today, I think we mentioned I was pretty bullish on Boeing last week, and Boeing is having a good update today. So are the airlines, which I think is a sense that normalcy is getting stronger.
How difficult is it to actually take a flight somewhere these days? What kind of hoops do you have to jump through?
I think it's pretty easy. You know, I think it's pretty straightforward. I think things are functioning pretty.
Do you wear a mask the entire flight? Is that how it works?
I think so.
Okay.
Yeah. But we are sort of making a rounding bottom here on most of the airlines.
There's
and
UAL.
Boeing.
I'll put up Boeing. There's Boeing.
Yeah. So you remember what happened last time? I mean, we called the Boeing from the 119, and look what happened. It went really crazy. And Boeing is a formidable company, and it's without Boeing, would be done.
Now they've announced they're no longer going to produce 747s, right?
Yeah, yeah.
How big a part of their business was that?
Look, they're not making many of them anymore.
Okay.
It's really kind of wound down. They're just doing the presidential planes, and that's about it. Maybe a few tankers or something like that. But I mean, they're starting to go hypersonic. I mean, they're good. They've got a new presidential jet design that would be 90 minutes from London to New York, 3,000 miles an hour.
Wow.
And Virgin's coming up with a new space plane, and so I think.
Whatever happened to the Concorde? That was, what was it, the 70s?
The hypersonic generation is coming. I mean, it's coming pretty fast, and we've talked about this a number of times. These electric companies. I mean, it really is like the Roaring '20s, the early days of the Roaring '20s, 21st century style, because we're seeing these electric car companies popping up all over the place and getting a lot of value pretty quickly and becoming contenders. So, I mean, Cadillac's just unveiled an electric vehicle, and GM's talking about having, a dozen or so, 22, 23, and then we've got all the flying contenders, the flying cars.
I just Googled electric airplanes.
So, a lot of good things are coming. And I mean, another area that's just mind-boggling is in terms of breakthrough designs and things. Is watercraft. The America's Cup has got it's a new single-hulled hydrofoil type thing. I mean, it's pretty exciting. And there's all kinds of fascinating watercraft that are popping up out of everywhere, and I think that's going to even have an impact on shipping in the future. Maybe faster ships and more efficient ships and things. So there's and of course as far as
there's an awful lot of space on an aircraft carrier to put solar panels. That's for sure.
Yeah. So anyway, the market today is a little bit risky for the tech buzz.
Oh, the NQ has been just really swimming against the current. We caught a bounce, guys.
It had a good bounce, and if it can build on this bounce, I would still see new highs. I think still 11,300. We may just be within a few hundred points of the high, or we might have even seen it already. But when the Dow becomes the last man standing, which is what's going on today, it's fairly. You really need to be very, very careful. So, and of course we're going into the middle of August, and the dog days of August can sometimes be treacherous, because all these fellas are out in the Hamptons, sitting around drinking, and maybe taking their eye off the ball on the market, and that very often causes a downturn in August. So I think the odds of a downturn this month are increasing as we speak. And even Boeing we just lost the dollar, just like we were talking. So this big rally this morning is not necessarily holding just at the moment. So we have to be very, very, very careful right now. This market.
I agree. I just put an alert out in the channel for the NQ. So guys, make sure you take a look at that. Anything else you want to look at?
So, actually, if you could put up Roku for a minute, Dwayne, I noticed something about Roku today that might, I don't know if it's going to show on your chart, but if it does, I'll kind of explain it.
There we go.
Yeah, it's kind of interesting. Do you see the way Roku lifted off the 110 level and we called it? Remember, we called a big rally up to this new all-time high. It's almost like it's inverted. Do you see how it's kind of like almost the exact opposite that's going on today? In other words, we made this little island top here, right? A couple of days ago.
Yeah.
Last week, and then now we're sort of coming down. And potentially we're about to break the uptrend line going back to March. So this is a pretty well, certainly we come back to that level firstly, and then see where we go. But I think maybe Adobe, ADBE. That's one of my leading indicators.
Have you tried to use any of their software lately?
Yeah, we talked about it before. No, I actually was. Yeah, there's a kind of a reader. I think they've got a reader. Difficulty downloading that. But you see how this thing looks like it's starting to get into trouble here. We kind of made a double top failure swing. Didn't quite make a new high.
Yeah,
now
lower
look,
high.
this could still be a consolidation, and we could still have another rally beyond this. So, not necessarily calling for the end of the world, but obviously, if something comes out of the left field that nobody, one of these black swan events or something like that could change everything. And of course, the polls could change as well. As far as I'm concerned, as long as the Rasmussen remains, in the upper quadrant of the 45 to 50, we're probably, okay. And I think Trump is. I think Trump is doing a good job. He's doing something, not just doing one thing every day, he's doing a number of things every day, which is, I think, resonating with people. And I think if he continues to do something very good every day for the rest of the 90 days or so, it's probably going to pull through. But 48% is okay. For re-election right now, and this one doesn't get it wrong. It seems to, because it's unlike all the other polls. There's no, this is kind of it doesn't involve any human beings except the fellow who's answering the questions.
Right.
and so you get a kind of an unbiased, much more of an unbiased poll on that. It's one of the most accurate polls. So, but anything could happen between now and election, so we have to be ready for it. But the way the market went, the way we opened high this morning and then started to sell off is troubling, a little bit troubling, especially on a Monday.
Chart of the S&P. Yep. We got potential resistance overhead at 65. Because back here in February, now this big gap right here, we filled that gap last week finally, and I didn't even notice this little gap here. On February 20th, we closed at 71.25, and then the next session we opened at 65. So there's about 6 points there. But it is an unfilled gap, and we know how the market is about filling gaps. It's really rare to see index futures go that long without filling a gap.
This Tom DeMark, he's the one who wants what we get up to 3,400, and so I think if we get up to, if we do have another surge in the Nasdaq, and we could, like if we
all-time
tomorrow
historic high based on the December contract.
We have a turnaround. Look, actually, if we turn around here in the Nasdaq and start pushing higher, either now or overnight and going into Tuesday, I'd actually be pretty bullish, because this pullback this morning would give us another pretty strong boost to the upside. But I think you have to be very, very careful up around 11.2, 11.3 or so on the Nasdaq. When you get up to these levels, I mean, if you, as a strategy, if you sold, if you get a sell signal on any of the FANGs this morning, such as Microsoft, Roku, Facebook, Amazon, Apple and Amazon are a bit stronger today, but those three alone are, you made money. You made money if you shorted those this morning. So the
NQ
vaccines
has held every pullback since April. This is on the daily chart.
Yeah.
May 4th, May 14th, May 27th.
The vaccines are generally off their highs quite a bit.
July 24th. Which one? Which vaccine you want to look at?
Well, mRNA, INO is. We talked about INO coming down, possibly to 15 or 16. It seems to be finding its way down there bit by bit. The drug, the drug stocks the pharmaceuticals have gotten a bit weaker because of Trump's trying to keep the price down. Mm-hmm. But I still think they're, Johnson & Johnson in particular looks very good. Maybe Lilly and Pfizer, those three look like they could, if they kind of went to a buy, I'd probably want to be long.
Now, Trump's trying to help the American people by driving down prescription drug prices. But yet, the other team, they're going to use that as ammunition. The pharmaceutical lobby, which is huge, their pockets are so deep. They're out for blood. The other one is, the Tesla has been hit, kind of taken back quite a bit. It's struggling to rally. It hasn't kind of got its footing yet. I wouldn't rule out another rally in Tesla that could really lift the market, help lift the market, if that were to happen. One stock that's doing pretty well today is SRNE. It's the one we talked about last week. Mm-hmm. It's got the saliva test. Look at that. It's nice to see this little bit of consolidation before this continuation, because that gave it a chance to retrace, but buyers held it up, so they gave it another leg. If we get another little consolidation like that, who knows how high this thing could go.
And I think it's got a lot of upside. The fact that it's gone this far, it's sort of like, the anointed one, because people, I think the need for it's obviously got a fantastic base, which is a big deal. It's been up there before, so it's got all the right ingredients, this one, for a further rally. And the world needs a half an hour test, saliva test, like really badly, an accurate one. And if this one can deliver, that would be a very, very big deal. So.
Wow, look at that. That is quite a base.
Yeah.
Well, the all-time historic high on this one was up, $750?
Right.
So, is that even good data? Look at this thing gapped hundreds of dollars. I think something must be wrong. But anyway, that's a monthly candle. Okay.
So one other thing, Dwayne, before we go, so actually getting a little bit of a sell on Sorrento right now, possibly a big one. There was a stock this morning, kind of an interesting stock, that came out, MCRB, I think it is.
Okay.
Is that the one? Yeah, check it out.
Good.
Look what happened to that. It opened around 20 and ran all the way up to 30 plus and came down again.
On what kind of volume?
Probably pretty big, I would say.
Interesting.
Yeah.
Okay.
So, okie doke. Well, listen, have a great afternoon.
All right. John, thanks so much. Talk to you later. Okay. Yes, there has not been any kind of a deep retracement or even a decent pullback on the NQ. So trees don't grow to the sky. When we hit the all-time historic high, everybody said, well, that's it. And then we put in another high, Now another high. Is this the turn? Well, we always look to the S&P for that type of guidance. And so we know where the potential obstacles are overhead. We know that the biggest obstacle, of course, is the all-time historic high. And in the interim, we'll just trade what's in front of us, like we did this morning in the live training room, and like we've done since 6 p.m. Eastern last night, when the Logic 247 channel opened. Here, if we get back below the BBC, if we get below blue and climbing, there will be another alert in the channel, just like the one that was in there earlier today, which takes us from 33.42 down to 33.40. Yeah. Okay. All right. So, silver. Silver, the Concierge Trade Alert last night for silver was to be long 29.15. We ran up $1,900 per contract traded. There's a fresh alert in the channel based off of this. Now, this trade, if you've earned the right, and earning the right is so important, you've earned the right to trade 10 contracts, that's a $19,000 move. And silver has so much upside potential. Over the last few weeks, I've talked about it at length on some of the daily shows, so if you're going back listening to some of the daily shows, you'll see us really dissecting the chart on silver. You'll hear us talking about gold and what it would take for gold to double from here. Gold's never been to that price before. If silver doubled from here, silver's been there before a couple times, and the market is always more comfortable going places that it's never been. We're just talking about medicine and the big pharma and Trump, and Joseph H. says his wife's Medicare and her meds, his wife's on Medicare and her meds have dropped from $160 a month to around $50 a month. Wow, that's a great thing. Okay. So again, coming into the show, this week, 23 alerts so far since Sunday night, last night, 6 p.m. Eastern, 16 actionable alerts, 1 stopped out. Last week, for the entire week, 89 alerts. Now, again, that's just logic. Concierge is a completely separate issue. But the two support each other, go hand in hand, and are both driven by the methodology and strategy that you learn in the live training room each day. You see, our goal here is to teach you how to find these opportunities yourself. In other words, teach you how to trade. As you're learning how to trade, as you're learning to find these opportunities on your own, we provide you with live, real-time examples that you can trade as you're learning to spot the opportunities yourself. In my opinion, humble as it is, that's the best way to learn anything. Okay? It's one thing to learn out of a textbook or even from a video and historic charts. Need I say more? But when you're learning in a real-time environment, I think the cool kids say that's the bomb. Or maybe that was last decade. So we average 20% being stopped out on any given week over the last 105 weeks based on not risking more than $300 per contract per trade. And here's where we stand this week. Okay. Let's go to our good word for the day. And if you're new, one of the best things you can do with your time, number one, make sure you're hooked up to all the channels in Telegram. Make sure you've watched the FAQ, the frequently asked question videos. Make sure you've studied the abbreviation chart. Make sure you've studied the chart or the post that Valerie put up last night in the Alert Trial channel that explains the abbreviations in the actual alerts themselves. You've got an entry, long or short, buy or sell. You've got an initial target. Then if it's a long, you've got potential areas of resistance all the way up to the weekly trading zone. If it's a short, you've got the entry, the initial target, and then potential support on the way down to the weekly trading zone below. Okay? All very simple once you understand it. I know when you're new, you get hit with a lot of new, perhaps ideas, concepts, and of course we have different buzzwords than the last place you hung out. But I think once you get an understanding of what we do, how simple it is, and the fact that you can just repeat the process day after day after day, and that's what you'll see when you go back on YouTube and watch a show from last week, last month, last year. You'll see and hear us doing and saying the exact same thing we were saying a year ago, 2 years ago, 3 years ago. We've not changed a rule or a code in our indicators in over 8 years. If it's not broke, there's no reason to try and fix it. Because it's not broke, right? Okay. Here we go. Forgiveness. That's a big topic in the Bible. How about forgive and move on? Get over it, as they say. Philippians 3:13, forgetting what is behind and straining towards what is ahead, I press on. The greater the offense, the harder it is to forgive. But you must. Because whatever you refuse to forgive and let go of, you carry with you. And it will be like a concrete block strapped around your neck. Many of us in trading, because of the things that we go through on our journey, all the blind alleys, dead-end streets, promises that didn't hold water, the stuff, right? Well, you got to let it go. If you're carrying a chip on your shoulder, it's very difficult for Michael or I to try to teach you something so very simple that if you can clear your mind, if you can be still, if you can just grab a hold of this, within a couple days you'll be going, why did I never see that before? How come nobody ever told me this before? Well, you see, if the vendors actually taught you how to trade, then they wouldn't be able to sell you this endless array of products, these indicators and oscillators and seminars and all these things. Because once you understand how markets work, once you understand the principle upon which markets work, there's nothing left to sell you. You are the man behind the curtain at that point. So they don't want to shoot themselves in the foot. So they present you with these complicated problems and these complicated solutions. It's a never-ending cycle. And only you can break free of that cycle. Only you can say, hey, you know what? Enough's enough. I'm tired of chasing these parlor tricks. I want to understand how markets work. I just want to learn how to trade so that I can get up every day, get in front of my platform, earn my manna for the day, and then live life and answer the call that God has placed on my life. Ministry costs money. That money's got to come from somewhere. Now, trading is not the solution for every ministry. It's not. But the only way you're going to know if it is for you is if you actually have someone teach you how to trade. So this is what leads to the chip on the shoulder. This is what leads to the bad attitude, because of so many broken promises. Because those emails, they're so creative, they're so compelling. If I didn't already know how to trade, I'd buy that stuff. They make the ad copy sizzle. I can smell the steak, right? You got to break away from that. You do not want to be dependent on anyone. No guru, no chat room, not me, not Michael. You want to learn what we know, and then you just become your own one-man show. Of course, we want you to be a part of the family and still come hang out with us, because trading is a lonely business. So most of our traders that show up in the live training room every day, the ones that have been with us for years, they're there to have somebody to hang out with, somebody to talk to, because, again, trading's a lonely business, and when you try to talk about it with your neighbor or your spouse or your brother-in-law at Thanksgiving, you get these blank stares, because they don't understand what you're even trying to say. So, needless to say, we've all been to the school of hard knocks. We've all blown up accounts, etc., etc. Now, once something is set in motion, it will stay in motion until it meets a force greater than itself. And that force has to be you putting your foot down, going, enough. Enough. So whether it's in life, whether it's in the world of trading, let me ask you a question. Have you been mistreated? Have you been cheated? Maybe somebody somewhere lied about you, or maybe they fired you. Have you failed yourself? Are you asking, how can I get beyond my past mistakes and become successful again? Whatever your particular hurt, the solution isn't feeding it or denying it. The solution is to forgive and let it go, or you'll just continue to hurt yourself. It's often said that choosing not to forgive somebody is like drinking poison and expecting the other person to die. That's awkward, right? In order to move forward, you have to let go and be at peace with the past. Paul could easily have allowed the memory of the Christians he put to death before meeting Christ to destroy him and rob him of his destiny. But he refused to do it because he had an encounter and he was forgiven. Instead of allowing that to happen, he wrote in Philippians 3:13, "Dear brothers and sisters, I am still not all that I should be, but I am bringing all my energies to bear on this one thing, forgetting the past and looking forward to what lies ahead. I strain to reach the end of the race and receive the prize for which God is calling us up to heaven because of what Christ Jesus did for us." And here's one more scripture, Mark 11:25. "If you hold anything against anyone, forgive them, so that your Father in heaven may forgive you your sins." Now that's a tough one, but it's required. Forgive others so that God can forgive you. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.